Hello, everyone. It is April 28th, 2018. My name is Sam Borgi, Chief Editor at Hacked. Welcome to our weekly webinar roundup. Each and every week, we like to take a step back and take a look at the factors that influence the cryptocurrency market, the financial markets over the past week. And once again, we saw a lot of heavy action in cryptos over the past 7 days. So our goal today is to wrap up the factors behind those moves and to perhaps draw your attention to what you can expect heading into next week. So the agenda, very simple, straight to the point. We're going to give you a weekly review. We want to focus on the global crypto market, focusing on, of course, Bitcoin and the major altcoins. Anyone that made any significant move, we want to cover. We also want to give you a recap of hack.com and some of the content that we've produced there, and then some of the upcoming trends or the ongoing trends that could influence your investment decisions as we head into early May. So on that basis, as of Saturday, the cryptocurrency market was up $52 billion week over week. We actually peaked at around $437 billion on Tuesday. We then saw a pretty big correction in the latter half of the week. I believe Wednesday was when it really began to unravel. However, by Thursday and Friday, the market had rebounded again. And at the time of writing, we're looking at around a market of about $428 billion based on the latest available figures. So overall, when the market hit 437, that was, I would say, a gain of about 180 billion or 190 billion, somewhere in that range between that level and the swing low that we saw in early April. If some of you are familiar, the market bottomed around 249 to 250 billion in early April. I think April the 6th was the date in which the market bottomed. Since then, we've been making incremental gains. The rally now has extended for 3 weeks. The end of U.S. tax season has been attributed as one major cause for the rally. However, we also are witnessing a lot of positive developments in the space, a lot of different fundamental features that are making cryptocurrencies more attractive in the market. We are also seeing more institutional interest, some reports about Goldman Sachs looking to enter the market. They hired their first member of their digital asset team, who began working, I believe it was April the 16th. So Goldman Sachs is moving ahead. CBOE is still trying to list Bitcoin ETFs, and it is engaging now with the SEC on how a rule change can be implemented to make that possible. So overall, we're seeing a lot more positive developments in the market, a lot less dwelling on the negatives, and that has pushed Bitcoin, for example, to a high of around 96.76 on Tuesday. As of Saturday, it was trading just below 9,400. Altcoins have also been at the center of the rally. If you take a look at Bitcoin's percentage of the overall market, it's declined to about 37 to 38% as altcoins continue to generate funds, continue to generate bids. Some of the most notable moves that we've seen over the past week include Ethereum rising above 700, Bitcoin Cash, which has been an absolute tear, hitting a high near 1600, and Ripple XRP also reached a high around 96 cents. So overall, positive sentiment has returned to the market, as you can tell by these prices. However, there are some lingering concerns about possible downside pressure emanating from the so-called Tokyo whale. If some of you have been following our coverage of the Tokyo whale, he's essentially a trustee who has been tasked with liquidating the Mt. Gox wallets as part of that now defunct exchange. So he's been slowly offsetting or selling Bitcoin and Bitcoin Cash since last September, of course, to get the best possible price in the liquidation. We saw reports this week that 16,000 units of BTC and BCH have been moved out of wallets associated with the Tokyo whale. So that's led to speculation. Is he planning to strike again? Is he planning to unload or sell more coins? We don't know what the status is of it yet. Some have speculated that it could have been responsible for the large dip that we saw on Wednesday, although that hasn't been confirmed. The reports that I saw about the Tokyo whale moving funds out of the wallet was on Thursday, which would have been after the Wednesday correction. Nevertheless, we are actively monitoring this market. If you're all aware also, the Bitcoin whales were responsible for a bit of a tumultuous period early last week. So not this week that passed, the week before, where we saw Bitcoin decline by a couple $100 after a whale unloaded $50 million worth of BTC. And I believe earlier in that week, we also saw another $50 million sell order on Bitcoin. So overall, those who have oversized positions in the cryptocurrency do tend to influence price movement. However, it remains to be seen just how acute that impact will be. But nevertheless, please pay attention to the Tokyo whale over the next couple of weeks. The chart for Bitcoin looks like this. We peaked at around 9,600, close to 9,600 earlier in the week. We are now trading at around 93.78 based on the latest charts that I collected from barchart.com. The overall cryptocurrency market, the structure looks like this. You take a look at just the general uptrend. We saw a bit of a dip midweek, but the market has since recovered amicably back up toward the $425 to $430 billion range as of Saturday. So that was cryptos. As you all know, we also cover stock markets, forex, commodities. Stocks ended mixed to lower this week after rate hike jitters offset what's expected to be one of the best corporate earnings season since 2010. Actually, based on the latest numbers, according to FactSet, we are on track for a blended earnings gain of over 23%, which would mark the best quarter since, I believe it was Q3 2010. So overall, corporate earnings are coming in much better than expected. However, rising U.S. interest rates are taking a big bite out of bullish appetite, right? Bullish sentiment has been declining as the yield on the 10-year U.S. Treasury reaches and exceeds 3%. Toward the end of the week, it fell back below that level, but overall, yields are rising as investors sell the treasuries. So we are actively monitoring both sides. Corporate earnings are better than expected, but rising interest rates, which are expected to continue rising, by the way, could weigh on stocks. We saw an inflation report on Friday. Actually, it was part of the U.S. GDP report, which showed better than expected quarterly growth. However, core personal consumption expenditures blew past the Federal Reserve's 2% target, which means interest rates could rise more steeply to keep up with what looks to be a rise in inflation. So, a brief recap of Hack.com. As you know, we are releasing ICO analysis on a daily basis. We released one every day this week, including FIC Network, Arcona, and MYDFS, among many others. In terms of the most read articles of the week, we have Curiosity Turns to Action for Amazon and Bitcoin Cash. We have a long-term crypto analysis looking at Bitcoin and Ethereum. Some speculation about Litecoin's price trajectory, as well as Bitcoins. There was Bitcoin 25,000 by year end. And also some research that we did on buyers controlling the cryptocurrency market more than any time since March 2017. I believe buy orders accounted for the vast majority of the market moves in the week ending, or in the period ending April 21st, I would say. So overall, a positive sentiment has returned to crypto, and we are actively monitoring those as well as many other trends in the blockchain arena. Looking ahead to next week, we are of course keeping close track of the cryptocurrency rally. Will it continue, or will we see another correction? All eyes are on the Tokyo whale. Is this just speculation? Will he be offloading? We know that he has another $1.9 billion worth of BTC. At least that was based on previous estimates, and Bitcoin Cash that needs to be sold. So it remains to be seen whether that's going to continue as prices accelerate. He's received an average price of around $10,100 for the coins that he sold since last September. So obviously, they want to sell or liquidate those wallets at the best price available. We also speculated earlier about some possible manipulation with Bitcoin Cash. You can read up on the article online. I got a little bit of negative sentiment for it, but just based on some things going on Bitcoin.com. Bitcoin.com, for example, is listing BCH as Bitcoin, and it's calling BTC Bitcoin Core. And we're just wondering how many traders who are new to the market bought BCH thinking that it's Bitcoin. Anyway, the article is online. You can take a look at hack.com for more of that. Corporate earnings will continue next week, and we'll be keeping a close eye on U.S. non-farm payrolls next Friday. So that covers it, everyone. Thank you for joining us. If you have any questions or comments, email me at sam@hack.com or leave them in the comment section below. Until next time, take care.